Good morning and welcome to Greaves Cotton Limited's Q1FY24 earnings conference call. From the management we have with us Mr. Nagesh Basavanhalli, Vice Chairman, Ms. Akila Balachandran, CFO, Dr. Arup Basu, Managing Director, Greaves Cotton, Mr. Sanjay Bain, CEO and Executive Director, GEMPL. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nagesh Basavanhalli, Non-Executive Vice Chairman of Greaves Cotton Limited. Thank you, and over to you, sir.
Good morning, everybody. Hope everybody's doing well and staying safe. Welcome to the Q1FY23-24 earnings call for Greaves Cotton. As we had talked over the last several quarters, our strategic journey of being a key player in the full stack last mile ecosystem continues. Our mission and purpose of empowering millions of lives and livelihoods through sustainable mobility solution continues. Thanks to our talented team and continued investments, our focus continues, and the Q1 demonstrates some of these aspects as well. A quick strategic recap. Over the last quarter, we're glad to report that the integration of Greaves Cotton along with Excel Control Linkages, which was the acquisition, the 60% acquisition which we had announced in the previous quarter, is on track. The integration is going well. This has resulted in driving both growth and profitability. More importantly, this is expanding our reach to new markets, new customers, new products across automotive value chain and several other value chains. Point number 2, our recent acquisition of a majority stake at MLR Auto, the three-wheeler company out of Hyderabad, presents a valuable opportunity for our mobility division to strengthen our presence across the three-wheeler. More importantly, we've always talked about life cycle value extraction. This now gives us an opportunity when you look at the three-wheeler value chain to significantly expand our value chain offerings, not only from being a component supplier, whether in the terms of engines or motors or sensors or components from the Excel division, but also in terms of vehicle sales, service, spares, Greaves Retail supporting through the retailing opportunities, as well as the Greaves Finance opportunities that arise out of this. So the three-wheeler value chain capture enormously increases with this. Moving on, some of the other areas, glad to report that Greaves Retail is continuing to expand its network presence throughout India, and they continue to work across multi-brand spares, multi-brand service, and multi-brand sales and service, basically the 3S model. Greaves Finance recently launched the EV Fin, which is an innovative EV financing platform, which will again enable sustainable mobility adoption. Overall, as we continue to move from being a diesel engine mechanical company to mechatronics, electronics, sensors, a lot of the forward-looking areas in terms of technology, but more importantly also looking at profitable growth, especially in the engineering, retail, consumers, that is very evident, and I think our management team will take you through some of the details. We continue to be relatively a debt-free company, strong cash position which the CFO has identified in the deck. And we continue to invest our CapEx in all the key areas, be it our engineering business, our electric mobility division in terms of new products and components, as well as in terms of retail. So now with that, let me hand it over to the CFO, Akhila Balchandran. Thank you.
Thank you, Nagesh. Good morning, everyone. We are happy to report our consolidated revenue of rupees 569 crore for Q1FY24. On a standalone basis, Greaves Cotton has reported a revenue of 396 crore. Excel, the new acquisition, reported a revenue of 39 crores, and Electric Mobility reported a revenue of 135 crore. The good news is that the acquisition and integration of Excel into the Greaves fold, the revenues from the GCL and Excel segment stands at rupees 435 crore. This gives us a strong base to diversify our core product portfolio. On the margins, GCL standalone EBITDA margins are now firmly in the double digits at 11.3%. And if I were to look at the GCL plus Excel combined, the margins stand at a healthy 13.5%. This puts us on track of our historical trend of 13% plus margins of pre-COVID levels. The standalone PBT is at rupees 45 crore and the standalone business ROC is at 37%. The cash conversion ratio of the company is more than 90% and that augurs very well in terms of working capital management and also shows the strength that we are seeing in our legacy businesses. In terms of the balance sheet strength, as the Vice Chairman mentioned, the company has almost zero debt and a consolidated net cash of rupees 739 crore, which we will be using for further investments and expansion as we go forward. One area where we had seen a lot of pressure in the early part of last year was the overall commodity cycle, and that led to increase in the raw material costs for some of our product segments. I'm happy to note that the commodity cycle softening is having a positive impact as we go forward, and we are expecting raw material prices and raw material cost as a percentage of revenue to remain stable in the coming quarters. Given the regulatory challenges, our material subsidiary, GEMPL, reported subdued revenues of 135 crores and an EBITDA of negative rupees 71 crore. Our consolidated EBITDA was negative 14 crore and consolidated PBT was negative 10 crore. However, on a standalone GCL plus Excel basis, we saw very strong financial performance, and that reflects again the strength of the strategy that the company has taken over the last couple of years to diversify the product portfolio. With this, I will hand over to Sanjay to share his updates. Thank you.
Thank you, Akhila. Good morning, everyone. I will talk on behalf of Greaves Electric Mobility in quarter one. So quarter one has been a quarter of significant regulatory changes both in EV and IC sectors. In electric vehicles, the battery norms evolved to AIS 156 Phase 2 to significantly enhance safety of the battery component and for the vehicle. Further, the quarter saw FAME 2 subsidy on electric two-wheelers getting reduced by 30 to 50% effective June. In IC, OBD2 BS6 emission norms kicked in at the start of the quarter. Now, in line with the regulatory requirements, all our vehicles are fully compliant and certified with the AIS 156 Phase 2 standards and the OBD2 BS6 norms. Further, the product portfolio has been adjusted in terms of pricing to accommodate the decreased subsidy in electric two-wheelers. Specifically on two-wheeler performance. Now, despite the electric scooter market being flat Q1Q basis in quarter one, Ampere registered over 10% market share and recorded a double-digit growth in vehicle registrations. Another significant milestone in quarter one is that Ampere brand achieved a customer base of over 200,000 electric scooters in India. As was proposed during Auto Expo earlier this year, Ampere has already launched 2 new electric scooters over the last 2 quarters, ZLEX in Q4 of last financial year and Primus in Q1 of this financial year. We also plan to launch a high-speed, fully connected scooter NXG before the end of the calendar year. The twin impact of battery add-on cost on account of the new AIS 156 Phase 2 norms effective April and reduced FAME 2 subsidy from June led to a significant slowdown in electric two-wheeler industry offtakes in the month June, and it's continued in July. Though we believe that this blip is temporary and soon the retail sales will pick up considerably. Coming to three-wheelers, our product portfolio spanning across the LC and L5 formats recorded a 140% volume growth Y-on-Y basis as we continue to enhance the product portfolio and the dealer network across the country. Both our subsidiaries, Bestway and MLR became a subsidiary after we increased stake, as Nagesh said, during the Q1. Both the businesses have recorded strong double-digit growth Y-on-Y basis ahead of the market versus same quarter last year. Continuing to build on Q1, in fact, in July, we have recorded in these businesses the highest ever sales in three-wheeler business. On the new products in three-wheeler portfolio, our recently launched vehicles include the onboard diagnostics, BS6 compliant CNG and diesel vehicles. A lineup of new electric cargo and passenger vehicles is in the pipeline for launch under the Greaves brand. In fact, to enhance the brand visibility, the powered by Greaves branding approach is being applied to the L5 IC vehicles, where Greaves brand is dedicated to L5 EVs. I'll just hand over back to the operator for any Q&As that you will have. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and one on the touchtone telephone. An operator will take your name and announce your turn in the question queue. Participants are requested to use only handsets while asking a question. In the interest of time and fairness of all participants, each participant will be allowed one question and a supplementary question if needed. If participants still have more questions, they can join the queue afresh. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, you may please press star and one to ask questions at this time. We'll take the first question from the line of Rushabh Shah from O3 Securities. Please go ahead.
Yeah, hi, good morning. Am I audible?
Your audio is not clear. May we request you to use your handset, please?
Yeah, is it audible now?
Yes, sir. Please proceed.
Yeah, hi, good morning, sir. So I had a few questions. So in your genset business, could you please help me explain what are your plans in that segment? Because our competitors are growing at a much faster pace than us. Or is it that are we losing our market share? I just wanted to have your view. And what do you think about this segment going into the future?
Thank you. I think there it's a mixed issue. Dr. Basu, you want to take that?
Sure. So we are growing our market share in genset. What is happening is there is a change in the norms around the whole genset industry, and that is coming in between this year and the next year. And the application areas are quite diverse across industries and across various types, for example, projects, etc. And the reason why we are positive about it going forward is because of our fuel agnostic strategy. Gensets are also headed that way in terms of earlier they used to be largely diesel. Now there are options around diesel, alternate fuels like CNG, and also electric on some of the inverters on some of the lower capacity ones. So overall, we are looking at the genset space, both within India and for exports. and we will continue to play in that market. Thank you.
So, sir, if you could help me about the alternative fuel shifting to CNG, how will that impact our business?
So it just adds to us because our approach always has been fuel agnostic. So we will make the genset. We do customized products across our portfolio. So if a customer wants a CNG genset, they will get a CNG genset. If they want a diesel genset, they'll get a diesel genset. So we are fuel agnostic. Whatever are the fuels that a customer prefers, we will design or we make gensets accordingly. So it does not really impact us. It impacts us positively because we have a fuel agnostic stance. Thank you.
Okay.
And just to close it out from a non-auto, if you look at the full year 23 versus 22, I'm talking about non-auto now, overall. The strategy of diversifying there, the volumes had increased by 6% on a yearly basis, 23 versus 22. And when you look at a quarterly basis, non-auto almost grew 11% quarter on quarter, 24 versus 23. So the diversification strategy is across fuels, like Dr. Basu said, and across auto and non-auto, and that still continues. And that obviously helps with our capacity utilization. Next.
Okay. And sir, my next question is on the aftermarket side. Is there a big opportunity opening across, and what are we doing out there?
Yes, aftermarket is, by our own stated ambition, is definitely a growth and a highly profitable area for us. We have, as announced last time, we have a dedicated CEO who runs that business now. And when you look at it in terms of spares, in terms of service, and in terms of sales, right? So we are playing a three-pronged strategy there. Spares, it's multi-fuel, spread over both three-wheeler and two-wheeler, spread over not only IC engines, but also getting into newer areas like batteries and other EV-related components. Our market has expanded. A number of retailers and a number of mechanics pan-India has expanded significantly in aftermarket. Our spares service is getting back to pre-COVID level in terms of the number of vehicles that are coming in for our multi-brand service. And our retailing, we retail more than about 10 plus automotive brands through our retail 3S showrooms. So yes, that's a profit growth, and I think we have the CFO has started reporting the aftermarket numbers also separately.
Okay, so thank you. I'll join back in the queue.
Thank you. Ladies and gentlemen, may we request all the participants to limit their questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. We'll take the next question from the line of Raghu Nandan from Nuvama Institutional Equities. Please go ahead.
Thank you, sir, for the opportunity. Congratulations on a good set of numbers for GCL plus Excel. My questions were to Sanjay sir. Sir, on FAME 2 incentives, can you provide us some color and confidence? A, will we get incentives for future sales? And B, on historical sales, have we met the FAME requirements as per your knowledge?
Okay. So let me just give you an overview on where we are. We have, as you're aware, received a show cause notice from Ministry of Heavy Industries, which has been appropriately replied already. This matter is now pending adjudication for final hearing. Yeah. Now, just to give you an assurance that we have, as Greaves Electric Mobility, been actively cooperating with MHI and all their authorized bodies for this investigation. We have made a very comprehensive representation submission already and the provision of necessary clarification and any additional information that authorities have asked for. We have done it both proactively on our behalf and as has been asked us during the course of this investigation. I just want to keep you informed that we have been given an opportunity for hearing in MHI, which is pending, and we are very confident on the matter to be adjudicated in our favor. Kind of dedicated fully to aiding the country becoming a global leader in electric vehicle, not just design, development, but also indigenized sourcing, engineering, and manufacturing. So that's our position on this.
Thanks for that, sir. And just a clarification, when is the final hearing date? By when do you expect the matter to be fully resolved?
I cannot, because the matter has to be resolved on the behalf of ministry and they have to decide that timeline, but the hearing is likely to be next week.
Understood, sir. And on the current retail sales, are you offering FAME2 benefits to customers?
No, in fact, at this point of time, we don't have access to FAME portal, so we don't have that FAME benefit. So our pricing has already taken into account the reduction in FAME subsidy, and we're not passing on at this point of time any FAME incentive.
And dispatches in Q1 were lower than the Vahan registrations. Is AIS 156 phase 2 responsible for that lower dispatches?
I think there are multiple factors. As I told you, the industry has been flat. If you see Q4 of last financial year to this Q4, it's about 217,000 electric scooters got sold, almost equal in Q4 and Q1. So one is the industry slowdown, which happened on both the counts. One, as you rightly picked up, which is the new norms kicking in and certifications did take a little time for vehicles to stabilize. And then there was a subsidy impact which happened on effective 1st June, where subsidy was reduced by 30 to 50% on electric vehicles, and that did slow down the market. So it's really a combination of both of them. And then at the end of Q4, there was a higher channel inventory which also got reduced considerably because of higher offtakes that we see as a brand over the Q1.
Thank you for that, sir. And what would be the current...
May I request you to kindly rejoin the queue, sir, as there are
Sure. I'll come back in the queue. Thank you so much.
We'll take the next question from the line of Jyoti Singh from Arihant Capital Markets Limited. Please go ahead.
Yeah, thank you for the opportunity. So, sir, as earlier participant talking about the subsidy, so my question is on the similar side. So, could you provide some insight into the clarity regarding the EV business? Because in this quarter, we were not able to perform because of the electric mobility. So, what's your view going forward from here on?
Yeah. So I understood your question. It's like giving an overview of the whole EV business that we have. So I did actually mention briefly on the accelerated performance of our three-wheeler business. Yes, two-wheeler had a couple of interventions, whether it is regulatory norm perspective or whether it's subsidy related. But our three-wheeler business has grown 140% quarter on quarter, or by basis, if you see last year Q1 to this year Q1. And I did hint that July has been the highest ever sale there. So the first, overall, if you look at as a portfolio for Greaves Electric Mobility, there is a ecstatic performance or exponential growth that we are witnessing on the three-wheeler. I also did mention, but let me reiterate, that there are two new products that are going to come over the next 6 months. One is going to be a launch of electric vehicle cargo, which we will be putting in the market, called Greaves Ultra. That vehicle should hit at the end of this quarter, followed with a passenger electric Greaves Ultra coming in next quarter. And that should be a total incremental volume over the existing sales that we're getting in three-wheel. We are also growing the network, dealer network and financing network, both for our LC and LPI segments there. So that secures a robust growth map for three-wheelers. Coming to two-wheelers, as I did mention there, that our registrations continue to grow. And that's a good sign where customer acceptance is getting validated. We actually grew 12% quarter on quarter in a flat quarter. Ampere was one of the very few brands to grow 12% in terms of registration, which is a testimony of our customer offtake. And eventually, as you know, that if the registrations are growing, our billing will eventually match up to that. The other product that I did again mention, I'm reiterating, is the launch of NXG. That's the high-speed connected smart scooter, which is going to be coming before Diwali. And that scooter will further add to the addressability of our electric scooter segment. So overall, our addressability, if you see over the last 12 months, has gone up from about 35% to close to 75% of electric scooter market. And that would provide a very strong reason or a growth enabler for electric two-wheeler segment there. There is some slowdown because of the subsidy reduction that we have seen in the market, but we believe that as the festivities start kicking in at the end of this quarter, moving into the third quarter, I think the market should bounce back to the pre-reduction kind of levels. And if we can get our logical double-digit share in that market, which we are continuing to work towards, we should be reasonably well placed to register good performance in electric two-wheelers.
Okay, thank you, sir. And sir, also if you can highlight how's the momentum on the EV fin side, and third is on the inventory side, how many weeks we are maintaining it? Thank you.
Yeah, so on the EV fin side, you said, is the finance side?
Yes.
Finance?
Yes.
On the financing side?
Yeah, second question.
Okay, second. So let me just first answer the second question. If it is EV fin as a company, then I will hand over to Nagesh to really address that. But on the inventory in the channel, the norm that we have is between 4 to 6 weeks, and we are not over that at this point of time. That's the kind of inventory that we are maintaining at the dealer level, if you are talking about two-wheelers. Very similar kind of norms are there in three-wheeler. Three-wheeler inventory has come down a little because there was liquidation of the stock which happened, old stock during Q1, because the norms have changed and the new norms certified vehicles took some time to really build into the market. So that inventory is a little lower, and the two-wheeler inventory is at about 4 to 6 weeks across dealer network in India. On EV fin, let me hand over to Nagesh.
Thanks, Sanjay. On EV fin, as we all know, it's our latest startup to enable electric mobility financing. It's an enabler, or it's a smaller or the latest startup. Own operations have started under the brand name of EVFin, right? EVFin by Greaves. So that was launched in the past quarter. We have launched direct operations in about 3 cities. We are more in the proof of concept phase right now. We've empaneled about 3 OEMs, so 3 people doing electric mobility, and 2 multi-brand chain outlets, including Greaves Retail, right? And other multi-brand OEMs and financing sign-ups are in the way. So I think it's still early stage. The idea here is it's a fintech where we're looking at the asset life of the battery and how to determine, be a key enabler or a key catalyst in electric vehicle moving to much higher numbers. So that's kind of the enabler, and we'll keep you informed as and when the story develops. Thank you.
Thank you. We'll take the next question from the line of Smita Mota from Credent Info Hedge. Please go ahead.
Hello.
Ma'am, please proceed with your question.
Yeah. So my question is, sir, that can you segment-wise, can you report that what you have done in the EV segment post the FAME subsidy being taken off and before the FAME subsidy which was allowed to you? So segment-wise bifurcation if you could give, sir.
Yeah, so EV, the revenue that we reported is 135 crores. That does not include any subsidy in this revenue. If you look at the equivalent quarter last year on a Y-on-Y basis, there was a 90 crore subsidy in 270 crore revenue that was reported. Yeah. So if you take that as a total number, it will be about 180 crore revenue of last year without subsidy versus 135 crore this year without subsidy. Does that answer your question?
Yeah, that answers my question. So which means without subsidy, the revenue has dropped. So do you think going ahead also this will, have a problem in your books? And what about the engine business also?
Yeah, so on the electric mobility, let me answer, and then I'll hand over the engine business to Arup to answer that. On the electric mobility segment, I think it's been a quarter of a little more than anticipated disruption, and hence I think there was a little bit of inventory correction, which did happen at our dealer level, which going forward I would say that will get corrected. Yeah, so there should be the normal share restoration when it's happened. I think we will grow with the market. Now the whole question is what will happen to this industry, because our fate is also looked at the overall numbers that industry is likely to do. Last year the industry did 726,000 electric two-wheelers. This year, if you look at the trend of the 4 months, it is running almost at a similar kind of a rate. It did 217,000 in the first quarter, but the July numbers are only 55,000. So if you look at 60-70,000 per month, it's about 800 to 850,000. Now, if that has to be taken, and if you look at about a 10% odd share that Ampere has consistently maintained by being in the top 3 to 5 players in this country, we should be doing as good, if not a little better than last year. Over to Arup for Greaves engine.
So in Greaves engines, we don't have this kind of segmentation because we supply to a certain number of OEMs, and then the balance are supplied to the industry at large. And if I take away the OEM numbers, between FY23 and FY22, we grew at 16%. So that's the kind of number we've grown. And a higher number is planned for this year. So overall, we see growth across all the segments that we serve on engines. Thank you.
Thank you, sir.
Thank you. A reminder to all the participants, anyone who wishes to ask questions may please press star and 1 on the touchtone phone. We'll take the next question from the line of Sandy Mehta from Evaluate Research. Please go ahead.
Yes, good morning. I had 2 questions. On the EV side, can you talk about what is your path to sustainable profitability, and when can we see profits on an EBITDA level on the EV side? And second question was the UAE investor ALJ. How much money have you received from them already? What is the pipeline of further funding from that entity? Thank you.
Okay, so let me address the first question on EV profitability roadmap. I think I'm going to lay down a few pivots, maybe 5 pivots, the top 5 pivots which make us the right to win, not just the right to win, but right to profitability in EV segment there. We have a unique advantage actually of being the only true electromobility player in India with the following 5 pivots that I'm going to talk about. First, we have both 2-wheeler and 3-wheeler electric portfolio with us across all formats and all price points. Yeah? So pretty much we have a representation in low speed, city speed, high speed scooters. We also have a representation in electric rickshaw, in EV segment, both in cargo and passenger that I spoke about by the end of the year. So that's a pretty comprehensive addressability of the market, and the entire value chain capture across both the segments is a benefit to Greaves Electric Mobility. Second, across our vehicles, we do cater both to the B2C and B2B segments. And that is not just by having the same vehicle running both. We have unique use case and application-based vehicles catering to fleet mobility. In fact, just to give you one name there, one of the largest food service delivery chains in India, about 40% of the deployed vehicles are from Greaves Electric Mobility. That's 2-wheelers I'm talking about. The third path to profitability would be, unlike our competitors, we have demonstrated a unique ability to remain a cost leader in this country and have a unit economics positive philosophy to run our EV business there. Last quarter of the financial year, quarter 4 of last financial year, we had actually declared a 2-wheeler profitable operating margin. And that, given this blip going forward gets neutralized, I think there is already a demonstrated roadmap to profitability there. The fourth point is that we are continuing to invest. Your point on ALJ that you brought up, I think will get answered, but we are continuing to invest, benefited by our investors and our internal cash accruals at the group level, both in technology and innovation roadmap. We are the first 3-wheeler company actually to be providing data solution to our customers, and in the soon to be launched cargo and passenger vehicles, you will find IoT connected solutions as we go forward. We also hugely benefited by the synergies companies. And I think Nagesh did talk about the 3-wheeler value chain capture, but it's also in the 2-wheeler with Greaves Engineering, Excel Technology, the recent acquisition we made, Greaves Technology, the service engineering company, Greaves Retail, Greaves Finance, all are feeding to the GEMS value chain for catalyzing a very holistic leadership position at a profit level. So these are the 5 things there. To be specific, how long do we see? My sense is we continue to invest in both product and technology. So we should be looking at the exit of this year, or actually getting into next year, we turning into an operatively profitable domain.
And how much have you actually received from ALJ? I think the amounts mentioned were 150 million or maybe 220 million. Have you actually received some of this yet?
Yeah. So we have received already 150 million, which is the number you quoted. That has already been received by us.
Okay. Thank you.
Okay. Thanks.
Thank you. Participants who wishes to ask questions may press star and 1 now. We'll take the next question from the line of Rushabh Shah from O3 Securities. Please go ahead.
Yeah, thanks for the follow-up. Sir, I had a question on your Excel acquisition. If the company is making such good EBITDA margins, then why is the promoter willing to exit the company in the phased manner?
Yeah, obviously, you're absolutely right. I think it's a very profitable business, and there the question was about succession planning. And so we are working very closely with the promoters. So over a period of time, the promoters will exit, and Greaves has a roadmap to go from 60%, which we already have today, to the 100%. And yes, it opens up opportunities in areas of new products, new markets, new geographies for us. Yes, thank you.
And so my next question is, what are the challenges you are facing in your business going ahead? Let's say for the next 2 to 3 years, what challenges do you see in your business?
So I think that's a very macro question. When you look at it, I think the CFO already touched upon the commodity cycle softening. So that's we had seen that challenge over the last several quarters, and obviously that's turning favorable. Mr. Sanjay Bail talked about the regulatory environment in the electric mobility division. So I think that's one of the areas which we obviously will have to watch, which we will, the electric mobility team is very closely watching that. But when you really look at that, I'm glad you asked this question. The entire fundamental thesis of our strategy was on diversification. From being a diesel engine company a few years ago to going from diesel engine to a fuel agnostic diesel plus CNG plus electric, right? Plus our boys are already looking at future technologies, right? Going from auto to non-auto, because in non-auto we supply engines to construction, marine and defense. Then the second, the component vertical has now diversified into Excel type components, which is the push-pull cables, the sensors, the mechatronics part. Then we got into electric mobility, which is getting closer to the end consumer. Then we got into retail. So when you really look at it, right, auto plus non-auto, components, vehicles, and then retail, which is the post-purchase solutions and spares. So the good part, I would say, is when you look at it, yes, we are seeing regulatory headwinds on the electric mobility side, but the other parts of the businesses are seeing strong tailwinds, right? So I think that is, again, the strength of the diversification strategy. And obviously, we will continue to keep investing. We are a kind of cash positive, debt-free company, and will continue to keep investing in future products and future services.
Thank you. We'll take the next question from the line of Sandy Mehta from Evaluate Research. Please go ahead. May we request all the participants to limit their questions to 1 per participant? Thank you. Please go ahead.
Yes, thank you. This is more of a suggestion than a question, but while you're investing in the EV space and you have this period where you have losses there, it might help if you would break down, you give us a segment details, but overall EBITDA, overall EPS, if you can report the rest of the business, a consolidated basis, and then you can report EV separately, so it helps to value the stock. While you're investing in EV, people may value that more on a price to sales basis, but sort of it becomes very clear that the rest of the business is doing well and you have losses just in one area. It might help if you can sort of break that out more clearly, especially on the EPS level. Thank you.
I think good input. The CFO will take that. I think it's a good suggestion.
Thank you.
Sir, on the management's line, we are not able to hear you, sir. Kindly unmute yourself and speak, please.
We're waiting for the next question.
Okay, sir. Thank you. We'll take the next question. Before we take the next question, a reminder to all the participants, anyone who wishes to ask questions may please press star and 1. We'll take the next question from the line of Smita Mohta from Credent Info Edge. Please go ahead.
Yes, sir. Again, the same similar question of your segment evaluation. So can you give a ballpark figure on the auto and the non-auto segment currently on your revenue? What percentage is auto and what percentage is non-auto? And going forward, how do you see it changing in the next 5 years?
Akhila, you want to take that?
Sure. So, ma'am, just to clarify, we have shared the segment volumes in our presentation, and hope that clarifies.
Slide 9. Akhila, I said slide 9.
You're 5 years down the line, where do you see it going, ma'am?
Sure. So, I would like Dr. Arup to take that question.
Okay. I think there are two dimensions to this. First of all, we see both going up quite a bit. Secondly, I'll add one more layer. The auto pie is going to be a combination, like it currently is, of diesel, alternate fuels, and electric. And that pie will get larger, and the ratio of these three types of fuels, I'm calling alternate fuels, all clubbing them into one, that's going to change depending on the kind of policies, enabling policies that appear in future, and also the equation between CNG and diesel and petrol largely. But we see three-wheeler demand growing significantly because of underlying trends of increased urbanization and last mile mobility and the push towards a greener, sustainable mobility solutions. That's one part on the auto side. Non-auto is a combination of all other prime movers, and that's linked to the way the economy grows. There also we see significant growth happening. So in both these cases, we see a fairly aggressive growth in terms of demand of these products. And that's one of the reasons why we have decided to pursue a bespoke, customized, fuel-agnostic approach to developing prime movers.
So currently, how much EV constitutes to this?
In the three-wheeler space of L5, which is the main passenger and cargo, I'm not talking about e-rickshaws, but in the regular three-wheeler space, the electric component currently is about 10 to 12%.
Correct. So if you take last year, about 65% was CNG, about 22 to 23% was diesel, and about 12-13%, as Arup mentioned, was the electric. But electric is seeing a month-on-month growth of about 10% right now. And that, if you look at July numbers, just the last month which has gone by, is inching towards 15% of the total L5 market. That's it.
So is it inclusive of two-wheelers also?
No, I'm talking only on three-wheelers. The three-wheelers is currently trending. L5 format would be 40,000 a month. That's about 500,000. 500,000 of L5 format of three-wheelers makes, I'm talking about IC plus EV together, makes it almost close to 80 to 90% of pre-COVID level sales. Out of this, about 65% is CNG, about 20-odd% is diesel right now, and about 15% is electric. That's the current trend. That's a
Thank you very much, sir. Thank you, sir. Ladies and gentlemen, we'll take that as the last question for today. I would now like to hand the conference over to Mr. Nagesh Basavanhalli for closing comments. Over to you, sir.
Well, thank you all for taking the time, and we appreciate your interest in Greaves Cotton. Management is available for any follow-up questions should you desire. We are available and to answer any questions. Thank you again for taking the time. Have a great day. Thank you very much.
Thank you, sir. Thank you, members of the management. Ladies and gentlemen, on behalf of Greaves Cotton Limited, we thank you once again. Stay safe. With this, we conclude this investor call. Thank you for joining us. And you may now disconnect.